Before we begin, a quick disclaimer. This podcast is for entertainment and information purposes only. It should not be relied upon as a base for any investment decision. Nothing here is a solicitation or an offer to buy or sell any security. Either the host, guests, or clients of either may own securities discussed on this podcast. Go. Welcome to another episode of the Special Situations Cast. Today we've got a very special guest. It's Jan Svenda. And Jan, welcome.
Hey, thank you. Thank you, Bram, for inviting me. It's a great pleasure to be here with you.
No, it's my pleasure to have you. And Jan is currently focused on short selling, so that's something different from past episodes. But short selling is kind of a special situation too. His work can be read on breakoutpoint.com. And he's also running a podcast that's dedicated to short selling. You'll be able to find it in the show notes. I'll definitely link to it. And he also published a periodical. It's available to Seeking Alpha Pro members, I think. Is that correct, John?
Yeah, it is. It is for the Pro platform. On Seeking
All right.
Alpha.
And that's like a weekly that's focused on short selling, right?
Exactly right. Covering what's happening on the platform regarding short selling and covering some of the exclusive articles also that are available only for Pro members. And from time to time, I kind of delve into some of my stuff as well.
Cool. And you also do a lot of having to do with like the activist short selling campaigns, right? That all usually get a lot of press.
Yeah. I mean, so Breakout Point, that's a platform where basically they track the activist shorts and they, have a database where you can track all the developments as well as the initial report. You can see it and so on and so forth, and a summary of the campaign. And so that's kind of where I come in and I write the summary of the campaign, and I write some weekly content as well for them covering the activist shorts, which is certainly and has been in the past year or so really fun thing to do and to learn from it, and also to just observe how the situations actually play out, and how can I actually make money out of it, and so on and so forth. So that's kind of like my main focus on the short selling side, trying to cover what the activist shorts are doing, and try to perhaps do some of my own research, connected to what others have released publicly, and so on and so forth.
Oh, sure. So you're often building on things that are out there, like you're adding due diligence, or
Yeah, I mean, for myself, I think a lot of times what happens is that, I read the report, and actually, especially in these months, the stock really goes up a lot. So usually, so it's not really the case where, you would see some of the stocks, plummet within a day or so, while, of course, the opportunity is still there, and maybe you can do a bit more due diligence on some points, or really make sure, that the author of the report, has everything right, and so on and so forth. If, is there someone who has a different opinion, or, what could be the counter argument for some of the notes released in the report? So I do kind of this, extra due diligence, let's say, and I build upon that, and I then either establish position myself, or perhaps I take some learnings from it and apply it somewhere else when I'm looking for shorts, and so on and so forth. So yeah, I think it's really helpful, especially for people who are interested in short selling, to kind of start with that, because it is the easiest way to kind of learn what happens, what are the allegations, how people respond to them, or how the companies respond to them. And yeah, I mean, and I think a lot of times it is and can be very, very fruitful also exercise, because, with Luckin Coffee, for example, you had the reports released in, let's say, early January or late January, and the stock collapsed in April. So, and the stock didn't really go down that much.
Yeah, just for people who don't know, Luckin Coffee is sort of the Starbucks of China, and there's been it's been a short campaign, I think, for a few years, right? or in,
With Luckin Coffee, I mean the main report that I'm aware of really came in January of this year. I mean there were a lot of
okay.
like questions about like the viability of the IPO and so on and so forth, just because it's another Chinese, or it was it's Chinese entity, and so therefore there's a lot of things with the IPO that are usually not necessarily the clearest and so on and so forth. But basically,
And who
in
published the
January,
January report?
yeah, the January reports came out, which was or the first one was an anonymous report,
Mhm.
which basically said we've hired a crew of people that went in and sat down in the cafes and counted how many people actually go and buy some things, and then they kind of cross-checked it. Of course, this is a bit of a generalization, but that was basically the gist of this of the exercise, where they just hired a lot of people to double check whether the sales make sense, whether the average selling price is right. And when they compared their findings on ground in China to the SEC filings, the report said, well, we think they're inflating revenue a lot, and a lot of the things that they disclose in the accounting doesn't really make much sense. So that was like a very interesting example of relatively simple due diligence in terms of the idea behind it. But of course, I mean, they really had so many data points. They went to let's say 1,000 stores across China, and
Yeah,
really made their work
but kind of
very well.
the
Yeah,
grunt work where the short sellers really do like the leg work, and they have like
yeah.
pictures of all the stores that uh, I usually think that's like pretty impressive.
Yeah, I mean this one especially was really crazy. I think like it was really a whole operation. They even got people to send them some invoices once they bought something online from Luckin and so on and so forth. So it was really, a really a vast enterprise to kind of prove their point. So that was kind of like, I think, one off, or perhaps there were others in such a large scale, but certainly sometimes it's not as big. Sometimes a simple Google map search is all you need to really show that there might be some questions that shareholders might want to ask the company. But yeah, this was a really, really interesting example of like
Yeah, and
really, really impressive legwork.
how much did it go down ultimately? Like 90% or something?
Yeah, I think so what happened was then, yeah, then the management basically admitted that they inflated revenue, and the stock went down like 90% in that day or so. And then, yeah, now it's jumping around. I think it's still trading at around some, I don't know what the current price is right now, $3, but basically $3 from like 25 before 27 before the fall. So yeah,
Yeah.
it's still trading, but because there's still some parts of the business that are kind of viable, but it's not like Wirecard, where it's like really a big part of the business was fake, which is another huge story that recently came out. But
Yeah,
anyway, so
Wirecard is
Luckin,
a
Luck is
German,
individual.
like a German, how's it called? Like sort of a fintech, a payment processor.
Yeah. Yeah,
And
yeah, kind of like a payment processor. If you go online, you buy something, they would provide the back
yeah, they
end.
were kind of the tech pride of Germany. And
Yeah.
it turned out that they, well, there was like 1.5 billion invented, I guess.
Yeah. They just invented cash basically,
Yeah.
but 1.9 billion was missing. But yeah, it was really. I mean, that's like a huge learning story as well for people that would want to do short selling. I mean, I think a lot of the shorts on Wirecard didn't really make money because they were short for a long time and the stock really went against them a lot of time. And even though the allegations were quite clear, all backed up by public data, and just simple questions. I think at the end of the day, if it's a good report, you should identify several questions that you could ask the company as a shareholder. Is this true? Why is this so? Whatever. And if you can identify such simple questions, I think that's really, that's where the power of the report really lies. So yeah, in case of Wirecard, it was just, there was some Indian acquisition for hundreds of millions of dollars. where you didn't really know who got the money for the sale. And the company was just really secretive about it. Wirecard didn't really mention whoever got the money, which is, I mean, that's a huge red flag. So, and also there was a lot more questions like what they actually bought in India. And that was in 2015. Yeah. And people were using public data to showcase like, hey, this company is buying something that, we think is highly dubious. We don't really know who's receiving the money. There's some, of course, like offshore entity and whatever. And so I mean, these kind of simple questions usually undo the company, and that was the case for Wirecard. But 5 years later, in that sense, because they were able to basically just get the auditors on their side, the regulators on their side. I mean, Wirecard was banned, the short selling was banned in Wirecard for a while in
Germany.
The regulator really did believe the company, and
it's a crazy story. And now there's once it's done, then the craziest things come out, like with this COO with his private army or something. And it's, if you're not following that, it's a lot of fun. There's a lot of stories in Financial Times and stuff. I wanted to dig in a little bit, because those are like the success stories of late in short selling, right? Like a high profile company that collapses. And actually Luckin Coffee is also pretty high profile. And you said something interesting, like that a lot of people didn't make money in Wirecard. And those are like the successful ones. And so I think it kind of illustrates how hard it is to make some money on your short book. Is it your experience, or
Yeah, I mean, I think a lot of it comes down to risk management, and the really great advice of Mark Cahotas, who says that you need to understand where the jaguar in the tree is. That's a kind of metaphor that he's using. Basically, what he means by that is that if you are targeting Wirecard and it's 2008, which for some people was actually the case, because even in 2008 there were some allegations and so on and so forth. You might, or you should, kind of try to recognize where you are in the cycle and how likely it is that the company will actually go bust or the fraud will come out. And so I think that's really, really hard to do, to understand where the short is and whether it's really going to be undone. Again, Wirecard collapsed because of EY didn't approve the audit or didn't sign off on the audit. Because of the missing cash and so on and so forth. But even then, the market didn't really believe almost that they would do it, that they would actually, try to dig in a bit deeper as auditors.
Yeah, because you signed off for like many years, right?
Yes. I mean, yeah, they didn't even check the actually bank account statements as an auditor. So people believe that it will just continue. So, and that's really like, it's really hard to understand, whether that would be the one thing to undo the company. But, if you look at Wirecard, for example, you can see that, in late 2019 and early 2020, you had a lot of pressure on the company. And then when the Deloitte report, I think it was Deloitte, whatever. They had a consultancy company come in and investigate all these allegations and so on and so forth. And they came out and basically said, well, we're not really super sure about the financials. And, there are still some questions. We didn't get this document, that document. And even then the market still, it plunged a bit, the stock, but it went up a back. And so you could understand like, okay, well, if this isn't problem, probably the pressure is increasing and maybe a short opportunity is now a bit more doable than in the past. But it is really tricky to try to understand, where the short is and how likely it is that the fraud will actually be exposed, or, I mean, if it is fraud or if it's, some sort of debt bubble or whatever, that's probably the hardest thing to do, of course. And you can't really time it, so you try to risk manage, right? I mean, you try to just make sure that you somehow can make money out of it. And I mean, in my experience, I think one thing I learned even in just long only is just to spread the bet. So like, I'm not really concentrated. And I think that maybe there will be a time where I will find something that's really, insane. And I think that it might be worth to, break the rule. But so far, I mean, really very strict regarding the rules and regarding the position sizes, because I think that otherwise you can get burned very quickly. And
So what
yeah,
would you size that on the short side? What is like?
yeah, I think like 2 to 3% of the portfolio is really something that is probably on the very high side for me, because of just the experience that I have so far. And also, I mean,
Mhm.
I started shorting, let's say, a year ago. Of course, I was following it very closely then, and so on and so forth. So, but yeah, I try to be really careful with the position sizes. And okay, that means sometimes that the return is not like as huge as it could have been if I went all in. But I think that maybe
Yeah.
that will come more whatever. But yeah,
No, but it's
try to
like
be.
it's incredibly difficult to shorting. I mean, I do some of it, and then when you're winning, when my position is getting smaller, and I'm like, this is going well, Finally, people understand this company is crap. I'm going to increase my short, but then it bounces back,
Yeah,
and you're getting overrun,
yeah, yeah.
and
I think yeah.
you have to buy back stock when it's high priced. It's buying high, selling low.
Yeah, the right opposite of what you should be doing. Yeah, I mean, I think that I think that it's just, yeah, it's really tricky. And I think one advice that I found really useful is to actually short after the fraud is exposed. And that has been consistently actually like making sense, because even then, Wirecard, when it was exposed, I
Hmm.
think that the first day it ended, or like you could catch some short at like 30 euros, if I'm not mistaken. I don't really remember what the precise price was, but basically, even after it was exposed, and I mean, this was of course a huge problem for the company. They had debt and so on and so forth. You could really make quite a bit of money still uh, after the problem. I think that as I'm looking at it, like, yeah, 2 days after it was exposed, it was still trading at around 25 euros, right? And the
Yeah,
company is like now kind of like insolvent. Who knows if they're gonna, get something out of it. So I think that that's probably one thing that could be quite interesting, to really wait for the exposure and then short it, which again would be like when the jaguar is completely down from the tree and you just see it dying, and that's it, like when you short it. But yeah,
yeah. So you leave some money on the table. Maybe take like super small positions, and then once the catalyst is really there and everybody knows it, but
yeah,
some people like stubbornly believing no, that's not true. Uh,
yeah,
you still
yeah,
make the last 40% or
yeah. I mean,
okay.
with
That's interesting.
Wirecard, yeah, I mean, I was lucky enough to be short with options.
Hmm.
And it was
Nice.
actually, I the first position was like 2 3 weeks, or 2 weeks before it went bust, which was really a more luck than anything else, because I kind of start looking into it because of one prompt from person. And basically I started to look into it, and I was like, well, that's really crazy, blah blah blah. So I like get into a relatively small position with
Hmm.
options. And yeah, even with the
And if you
options
do
you
it
could
with
still.
options, are you taking long term ones, or did you see a catalyst upcoming?
This one with Wirecard, I bought long term ones, because
Hmm.
even then I was like, well, I'm not really sure if it's going to happen. I'm not sure when.
Yeah.
So I mean, now I'm trying to kind of like, roll over the position. So I mean,
Hmm.
it does make sense to buy short term. I mean, sometimes it makes sense to buy short term options and roll over them, because in the end, the price of the long term option might actually be higher than if you roll over the smaller priced short-term options. But I'm not really much into trading, to be honest. No, not really a huge quantitative analysis or something like that. So basically I just try to be long-term, basically, because I'm not really sure at some points if when something's going to happen and whatever. And so with
Yeah, but
Wirecard, even with the options, you could still make a trade afterwards. And like I think the one that I had was like 25 strike. It was OTM, like out of the money option.
sure.
And I think it sold a couple of times on the day of the exposure for about 12 euros, 13 euros, something like that. So, that's still a lot of, leftover downside, which you would now be able to realize. So even then,
Yeah.
it was
Yeah,
interesting.
but
An interesting experience for sure.
okay. Yeah, I think I feel kind of the same way as you do about the options, but I was kind of forced to learn more about them actually because of Tesla, which is, a lot of
Oh,
people
okay.
short that one. And like end of last year, it started like a parabolic rise. And it's
Yeah.
just, it's so hard to hold something like that short with just, with the equity. So that's when I learned about, okay, how can I structure this with options so I know what my maximum loss is.
Yeah.
And
Yeah.
that can be much more comfortable with some of these like hyper volatile, especially in this
Yeah.
market, like some, well, companies that I consider like kind of low quality that are,
Mm.
very much in play or very much in favor.
Yeah. I think that options I think are safe, from the start anyways. It's just a much safer way of doing things. And, you of course, I mean, you're running against time, which is not comfortable a lot of
Hmm.
times. And I mean, sometimes the pricing on the options is very funny. So if you are checking your portfolio quite frequently nowadays, then you see like huge losses just because it's priced
Yeah.
differently on
Yeah.
the
Yeah.
individual contract and so on
Right
and so
now, the
forth.
options are like are expensive on
Yeah.
average, but like
Yeah,
last year
it's
that
true
wasn't
as
so
well.
much the case. But
Yeah.
yeah.
Yeah. But so, yeah, I mean, I think it's just much like you're okay with the downside. And,
Hmm.
again, I mean, I think about it, if I take, a certain amount of bets, based on the research, I think eventually, I'm not really kidding myself that I can, make 50% a year or something like that. But, I'm more than happy to just beat the market, which is super hard. So,
Well,
with the
yeah.
shorts, yeah.
Well, yeah. Yeah. Actually, shorts, they don't really need to make you a lot of money before they add like a lot of value to a portfolio.
Yeah.
Because they make for a very different risk profile. That's what I like a lot, but I still would prefer to make some money on them. But I'm
Sure.
curious, what are like? I mean, you've studied so many campaigns and so many short sellers. And what are like things you learned to really look for in short targets? You already mentioned something, and that you
Yeah.
are looking for like the exposure to have happened. Does that mean that you are very much in the camp that likes to like short frauds, or instead of just overvalue targets?
Yeah, I mean, with overvaluation, I think nowadays it's super, I mean, it's almost like, why would you do that? Because it's just, where's the, I mean, what, like,
I'm wondering
you
sometimes.
mentioned Tesla. I mean, Tesla is $1,510. I
Yeah,
mean, it's just insane. So
yeah. I
I
figured
think,
it was
yeah.
overvalued at 200.
Sure, sure. Yeah. I mean, I luckily didn't had an opinion on Tesla for a long time, and I'm like, just like, guys, this is not my. I don't want to destroy my life obsessing about one guy dancing on the platform with some Chinese or whatever was the latest meme. So yeah, I mean, that's an example. So I think overvaluation on its own is it's a weak short thesis usually.
Hmm.
But what I do look for in the short targets, or where I pay really attention to the campaigns, is, sure, as you mentioned, fraud allegations. These are, of course, these can be tricky sometimes to understand or to really see the power of it.
Yeah, it
And
doesn't matter
also,
who makes the allegations, or just
Well, I think it has to be, well, I mean, it has to make sense. And you look at the database and you try to, double check whether the due diligence is right, or, if there is some piece of information, that you can double check, you could do so. Of course, you would, for example, Luckin, you couldn't do that really, because you would have to, do the same thing as they did. So that's of course something that you can't. But with Wirecard, for example, you could go and double check the public data and learn the same thing as the short sellers did, and basically say, okay, well, that's that's interesting. So I think if there's a fraud allegation, you can double check it, and also of course it makes sense to to listen who's saying what and what kind of track record they have, and so on and so forth. That certainly can be a piece of information as well. But I think with fraud allegations, it's always just good to listen, because it's, if they overblow the problem, so like if they say, oh, this is a fraud or something like that, and nothing happens for the next 6 months, maybe they're onto something. Maybe they're onto some bad corporate governance, something that's not necessarily like complete fraud, but maybe something that doesn't make sense, and maybe it might come back and haunt the company. So I think any sort of fraud allegation should be taken quite seriously, for sure. Also nowadays, I
But
think short sellers.
you're
Yep.
looking a lot at like what it's made up of, and can you check it yourself and that kind of
Yeah.
stuff.
Yeah.
What are like other things that you have learned to love in
Yeah.
short targets?
I think a clear catalyst, like that's super important. I mean, if if you say it's a fraud, what's gonna
Mm-hmm.
expose it? Or, I mean, of course, a lot of times the reports themselves try to expose the fraud. But even if it's not a fraud, or if it's a failure, then you should point out something that should somehow change the perception of the market. And that's really another important thing, because whatever the thesis is, if it doesn't have a catalyst, then you really are saying, oh, it might come down at some point in the future. But that's really, I mean, then you really are asking for a low return, because you don't really know like what's going to happen and what could happen against you. So I think first it's double checking the allegations and seeing whether it makes sense, but also then the catalyst. That's something, if if it's not really there, then that's something that, yeah, I would be asking, what could be the catalyst if it's not already written in the report.
What would be like typical
Yeah.
catalysts that you come across or that you like a lot?
I mean, yeah, nowadays, audits, maybe. I mean, Wirecard was one example. Maybe people are being a bit more overconfident with that, but any sort of event that needs approval from, audit, if it's fraudulent financials or whatever, I
And
think
you
that's one.
are you
Yeah.
pointing that out specifically because like there's now a lot of scrutiny of auditors because of the Wirecard scandal?
Mainly because of Chinese shorts, and we might get to them later. But basically, these companies are, they need to get the sign off from the U.S. auditors only once a year, and because they're a foreign filer in the SEC and whatever. So basically, they if it's if they get the sign off, then that's like, that could be a strong catalyst if they don't. So that's one thing, for example, to look for. Earnings, basically, of course, but if you are against a management that will try to pump the stock and try to tell a story or whatever, of course that could be quite hard. But eventually it should.
Management that tries to pump the stock, or no? Does that?
What do you mean?
No, it's just I'm making a bad joke.
Oh, of course. Oh, yeah. No, that never happens. Yes, of course.
Yeah.
No. Saying some obfuscations. No.
No, I always
Everybody's super honest.
take my shorts into the earnings call. It's yeah. This
Yeah.
this is going to be the time, Tesla. This is going to be the one.
Yeah. But so, I mean, yeah, in some ways, like, I mean, these kind of like events that force some disclosure onto the company one way or another. That's usually the catalyst. Debt maturities, whatever have you. Even though, of course, nowadays, debt maturities, I mean, or covenants, now everybody's renegotiating, so it's hard to kind of do that. But
Yeah, but
whatever,
the
whatever.
like the debt covenants that can like change really quickly, right? Because now we're back again to where most companies can roll stuff, but those
Yeah,
credit windows, it's like suddenly they close, and
yeah,
yeah, if you didn't are not prepared for that, it's game over. But
yeah,
yeah,
yeah.
it's,
So I think a lot of that, and any, I mean, yeah, in the short reports, I think it's like if you have really some solid, research, and I think if it shows something with the people, because in the end, the stocks and everything, the financial markets, just about people, and if you find people that are just dubious, I think that's really the core of everything in terms of short selling, or I mean, long only, maybe not as much, or long just strategies, because you might not have that big of a problem. If you have just a mediocre management, you could still make money out of it, whatever. But I think that if you find people with red flags, be it for their past track record or how they behave, again, criticizing the short sellers is a popular sport nowadays, of course. That's a red flag if the report is accurate, or if it's somehow well structured. Suing short sellers is usually a red flag. So I think it's about people at the end of the day. So if the report is somehow showcasing something about the management and how they run the company, it could probably showcase a lot of things.
yeah,
That
yeah.
might
I
be bad.
definitely try to do both. Like keep files of people on the long side that are like excellent operators, in my opinion, and you want to be with on their side. And I also do the opposite. And I think that's maybe a little bit stronger.
Yeah,
That like people who've committed fraud or maybe
yeah.
did some very questionable things. They're probably maybe that's more predictable. What's your feeling?
I think, yeah, I think on the I mean, I haven't really scrutinized the management on the long side, and I mean, coming from an OTC background, usually the corporate governance in these stocks is not really the most pristine thing ever. So on the long side, I don't really I didn't really stress it too much, and also
Yeah.
when I did long, like I really focused on the long side. I basically did the ODC, which was based on informational arbitrage, so trying to find some information that the market doesn't know about, not necessarily about like picking the right corporate management that might take the stock to the next level. That was not necessarily my style. But on the short side, I can really see that a lot of times you can find companies that are run by people that were previously in jail, had troubles with the lawsuits, whatever. And I mean that's really,
CEOs that were previously in jail.
yeah, I mean there were so now, to be completely honest, I need to make sure so that I don't get into any sort of
Oh no, you don't have to name
specific.
them, but that's
Yeah, no, but there was one case, but I'm going to talk about it. But let me just see, because this was a mortgage rate, so
sure.
that was very interesting. Great
Yeah.
Ajax Corporation, and there was a CEO who had some problems to write, so
Hmm.
convicted criminal. So he filed a fraudulent tax report, the CEO, yeah.
Okay.
And yeah, the stock got hammered because of the recent coronavirus and stuff. And previously, before that, it was just a kind of a dividend yielder, and it actually made money. I wrote about it in
Oh, this is
2016. And
a short that you actually really like.
no, not anymore, not anymore.
Oh,
But it's just
okay.
an example of like you can find managements with criminal past. So this is just an example. I'm not super sure whether the CEO is still there, but there was in 2016 a CEO of this mortgage rate who was a convicted criminal and filed a fraudulent tax report. So
But
that's
and
something that
how
really
do you
piques my
find out
interest.
stuff like that? Like that somebody has a criminal record?
You know what? I think that this was through some Google search,
Okay.
and they eventually had to write about it in the SEC filings, for
Right.
sure. So I think that a lot of times, of course, they do disclose these kind of things. But a more
They
recent
usually say
example, yeah.
something like nobody in our company has been convicted of any crime or something. So maybe it's a red flag if they leave it off.
Yeah, it could be, but also I think that with this was like IPO prospectus, and I think that one investor pointed out, and they had to disclose it afterwards. So these kind of things. But maybe more recent example, which is a very straightforward example, is just looking at the auditors. I'm kind of looking at Europe around, and I found one company which has very dubious auditor. That's a red flag, and that again is about the people, because who audits you and what
So
relationship
like
you have with them.
the top four auditors, they're like not a guarantee that you're not a fraud, like Wirecard. But
Yeah, of course. So in this case that I'm talking about, it is not a big four auditor. It's like some
yeah,
sort of small company.
so
But I think,
that's
of
even
course,
worse than the big four.
yeah. I think for sure. Well, who knows? I think they can really. I think they can probably fight it off about who's not doing enough audit. But yeah, like Big Four is of course is just a seal of some sort of approval. So most companies have that. If they don't have that, you should ask why they don't have that. If it's of course a small company, that could be one example. It's not like this is some sort of a complete tell that
Yeah,
some things
what
are off. But
auditors do are like kind of turn you off from a short that you think are usually not involved?
sorry, can you repeat the question?
Is there like an auditor that you think is usually not involved with, I mean, like
Oh,
most companies are not frauds, but I mean, like, is there one that is very good at avoiding them, or?
I
Um,
don't. No, I don't think so. I
okay,
mean, I think I'm just running the screen the opposite way. So it's like, yeah, I'm trying to find the ones that are not Big Four, and trying to find. But I don't think that there's any guarantee of any kind. I mean, if Ernst and Young did not check bank statements for Wirecard for the past 3 years,
yeah,
what on earth are like? What is the audit? I mean, not that Wirecard might not be incentivized to just create fake bank statement, but even if the auditor is not checking such a basic thing, I mean, what is the purpose of all of it? I mean, it's just yeah. So I think with auditors, it's a cool red flag when you find one that is doesn't have much history, or has some problems in the past. Of course, you can find in the U.S. Problems with the PCAOB, with the regulator of the accounting firms, or sort of regulator. So there are a lot of examples like that where it can be very interesting to dig in if you find something. And again, that's about people. So I think at the end of the day, thinking about it, like if you find something interesting with the people involved with the company, probably that's the most interesting part.
cool. Okay, so interesting. And then, yeah, well, maybe what are like shorts that you really like right now? What are your biggest
Yeah.
shorts or your?
I mean, I like Chinese shorts. So as I mentioned previously, there's been a couple of reports targeting China companies that are U.S. listed. GSX
Yeah, that
Tech.
sounds maybe pretty bad for people who are not like knowledgeable in that area, but there there's like a history of Chinese companies coming to the US markets via reverse listings, and then well, turning out that they're not real businesses, or that they were at inflated figures, right? And that goes like 10 years back, and there was a whole wave of those, and they were exposed by, I think, geo investing and people like that. There's a cool movie about it, The China Hustle. So, very much recommended. Yeah, did I summarize that well, or?
Yeah, for sure. I mean, I really recommend everyone to watch China Hustle. I think it's a great documentary. It really shows how crazy things were, including stories about one analyst being jailed in China for doing research. Yeah, all sorts of crazy stories, and just gives you an idea of how they were conducting the business back in those days. But it
Yeah,
seems that some of the business is still ongoing, and you can find companies like Luckin Coffee, which were doing kind of the same thing. So yeah, so I think nowadays, a lot of these Chinese companies, raise questions, and the short sellers are, quick to point them out. GSX Techedu is probably the most famous example, of course, right now, which is a online education company. and they've been targeted by virtually everyone in the short selling community. I mean, there's been really a lot of reports about the company being fraudulent. The reports allege creating fake users, fake market share, fake revenue, and so on and so forth because of the fake users. So I mean, this has been really probably the most controversial company right now that is out there. And I mean, since the first report came out on GSX, which was done by Grizzly Research, so it's a relatively well-known short seller, and they wrote about it in February of this year. And I mean, since then it's up 70%, the stock. Yeah. So I think that really, I mean, in any case, this is a very peculiar case, just because of the stock price action and the fact that a lot of well-known short sellers have piled on. Citron is short, Muddy Waters is short, or I'm not sure whether they're short now, but of course they did release reports that are saying the same things as Grizzly. Grizzly did an amazing update where they basically legally entered the systems of GSX Techedu and showed how the company should be creating these fake users. So basically they kind of provide an example for people to see. The management continuously denied everything, tried to question the reports and so on and so forth. But it seems like every time someone comes up and says this is wrong, you shouldn't be doing that, whatever, the company is going to somehow argue away the allegation.
They also did things like have a job listing for like programmers who were supposed to like make bot farms or something, right?
Yes, this was I mean, I think GSX Techedu is like, it's been entertaining, but not so much crazy stories yet, I think yet. But this one was great. Like, the company had a listing for a person that would create bots on the platform, phone farms and so on and so forth, which would of course support the allegation that they create fake users, and so on and so forth. But the company said, no, we're doing that because we want to defend ourselves from someone doing that on our platform. So that's the classic response that they have. So it's like, you create fake users. No, this was like one-off, blah blah, technicality, blah blah. You don't really see the whole picture and stuff like that. But I mean, this I'm very, very closely looking into. I personally, of course, I think that others are doing so much more research, and I think that the retail investors, it's quite hard to make a sense of the allegation yourself or double check it. But I think that when you see so much research done, and the response of the managements and so on and so forth, I think this should be really one to look at. I'm currently short the company, and I think that really the run up is completely misguided. One thing is the allegation. The second thing is that really the valuation now is even like way insane. But of course, valuation doesn't matter. But really, like, I think that the share price just doesn't make sense.
The valuation is up there. But do you see a catalyst in this case, or?
Yeah, well, I mean, one thing could be the audit next year. So I mean, we're looking at maybe a long ride here still. So maybe that's I just made a mistake myself, when I entered the position, but I have long-term options and so on and so forth. So let's see. But I think either the audit, which could be one thing, but the other thing is also the US government, who is now trying to pursue these Chinese listings, especially after Luckin Coffee. You have Donald Trump, who's not very friendly towards Chinese, or I mean, maybe he makes up his mind every day, whatever. But basically, there has been some intention of the government to make sure that the Chinese listings on the US market, adhere to some more regulation. The biggest problem with these Chinese listings is that the US auditor and the PCAOB, which again is the regulator of the accounting firms, cannot access the audits of the Chinese firms, because they are being done by companies that are in China. So you would have KPMG or whoever doing the audit, and you would have a Chinese subsidiary of KPMG doing the audit of GSX. KPMG is not auditing them, but just as an example. And you would have a problem.
These are
where,
like actually like completely separate entities, right?
I mean, they share the name, they share the brand, but they are in the sense that they can't get to all the stuff, all the documents, and that's really like one big problem here. Also, the fact that there is really no responsibility borne by the Chinese companies if there is a fraud. Those stuff that you mentioned, China
it's
hustle.
very hard to get like executives in front of a court. And
yes. I mean, there was an interesting panel.
Get some damages or jail time.
Yeah. I mean, Muddy Waters, I think, recently released some letter to the SEC during a panel that they had, and they said, we didn't see anyone going into jail or getting a fine after these really, really outrageous frauds that happened in the early 2010s. So yeah, I mean, there are a couple of problems with this, and I mean, if the U.S. regulators are somehow going to do something about it, or they should do something about it, then maybe that could be a catalyst on its own. But again, I mean, that might take a while before it actually happens. So yeah, but it's interesting to check for sure.
And any other shorts you really like?
Yeah, I mean, there are a couple of the Chinese like that are not as high profile and are still kind of like interesting. One for all, I'm not gonna really dig into everyone, but is maybe that one that had a bit of publicity, but not as much.
It's called One for All.
No. As in one example for the many that are out there would be GDS Holdings, that was targeted by J Capital Research. It's a data center company, and the allegations are based on financials, but also about how they're running the business and corporate governance. And so it's pretty let's say wholesome, the report. So it allows you to really see like what's going on, and it's not just completely random, just basically financial allegations, which usually can be really easily refuted by the company or whatever. But this is showcasing some pictures and problem with capital expenditure. So that's something that I also quite like, this one, GDS, and I'm short. But apart from the Chinese shorts, probably the one that I'm looking at the most right now is Inspire Medical Systems, which is the ticker is INSP. And this is basically a company that does a medical device for sleep apnea. And it's an invasive device.
Medical device. I think we've seen some success with those companies going down.
Yeah, I mean, I think what is interesting, when you compare medical devices to biotech, biotech can be really tricky to nail down. It could still be, at the end of the day, opinion against opinion, whether the trial will go through. A lot of knowledge has to be amassed, and it can be certainly profitable for people that are knowledgeable. But for example, for me, biotech is something that I'm not really venturing into, because I really don't understand much about the process and the disease involved or whatever. So, but medical device is something you can actually relatively understand, in a straightforward way, because it does not necessarily treat some complex thing. It is already probably approved, so there's not really something to question about the trial or the efficiency or whatever. But you kind of look at what has been happening. And yeah, I mean, White Diamond Research is one short seller that has been quite frequent in this market, and others have been as well.
And for some reason, like the devices, they're also pretty ideal if you want to run fraud, because it's not super easy. You can always be promising something really great in those medical names, and then delivering it is always out in the future. And it's like the Theranos one, which was kind
Yeah.
of venture capital, so it didn't really get to the markets. But what makes you like this one so much? Is there like in catalyst coming up this time, or what
Yeah. So I mean,
recognizes
INSP
you?
is exactly kind of the case where it's like the management is promising quite a lot. It was first targeted by Wolfpack research, and basically the idea is that the market opportunity for the device is nowhere near what the management is trying to sell the market. And this is really what I like most about it is you can actually see the track record of the device, and you can really kind of spot the sales, and you can see that they haven't been selling as much. They've been selling in Europe for a bit, and done so, but really in the US, for example, they offer the device for free to US Army veterans. And actually, only a sliver of the patients eligible decided to choose the device in the past 4 years. And you can actually check that. There's a public database which shows, how much money does the government pay to Inspire Medical Systems for these kind of surgeries, because it needs to be implanted into your body to prevent or to cure the sleep apnea.
Yeah, no,
So yeah, so you can actually track what's been happening in real time almost. Or I mean, there's of course some a delay of like 1 or 2 months, but you can really check whether there's some uptick in interest and so on and so forth. And it's really it just makes sense. The numbers are not really showing up, and my management is saying, oh, we should be able to sell 500,000 units, but they sold only about 7,000 so far. And the device has been approved by the FDA for quite some time. So,
and the patients,
yeah,
they're not too happy, right?
yeah. That was, yeah. I think one part of it was that when you look at the report, actually, you can also see the adverse events that happen when patients start to use the device. A lot of patients are stopping the device completely, or the usage of the device. And basically, there's a lot of argument to be made that the device is not really efficient, and that it's also much more burdensome, and that the competition don't require surgery and so on and so forth. So I think that that's something, yeah, really interesting. And since the short report went out, the stock went up 46%, while again they didn't really do much. And now elective surgery, or surgery that is not critical, is going to be postponed, maybe perhaps again in the US. So in the short term, you could see some problems for Inspire Medical Systems, in that they might not be really able to sell even the handful of units that they're usually selling. So that's one thing. But of course, the long run should be that they might keep on promising, but there's only some sort of lifespan of these kind of
But
promises
yeah,
that
do you have like a balance sheet to get through a rough 2020?
Yeah, I mean, let me just check, to be completely honest, to be sure. But I think that of course the problem is that nowadays you can raise money pretty easily and so on and so forth, to make sure that you do that. But even here, I don't think that
Yeah, I think it's a little bit. The raising money is there's like the haves and the have-nots. Some companies can raise money super easy,
yeah.
and for a lot of others, it's difficult.
Yeah, I think that obviously now, when you have the shares, flying up and so on and so forth, it's pretty easy to, to raise money. But yeah, they do have, cash, and they don't really have much liability. So it should be fine for them to continue. The balance sheet is relatively clear. But what is really kind of, clear is that the opportunity shouldn't just be there. So that's something I'm tracking very closely, and I'm also short because yeah, I just don't think that anything has changed since the report, and the report was quite clear. And yeah, it just made a lot of sense.
Yeah, that sounds like an interesting idea. What kind of market cap is that company?
2.4 billion. Yeah, 2.4 billion.
2.4.
So relatively big one. But when you have sales of like 80 million dollars or something like that. Yeah. Yeah. And like annualized last quarter is $80 million on a 2.4 billion dollar market cap. So that doesn't make much sense.
And Jan, this is so fascinating to hear you talk about all these short targets. But I also wanted to get you on to talk about some OTC companies. There's really small companies trading over the counter. I actually wanted to talk about quite a few, but I think in the interest of time, we'll not do that. But maybe we can do one. You have time left?
Of course. Yeah, of course. I mean, I'm completely fine to talk about for the next 45 minutes. I'm completely
okay, cool. Then, well, let's still do some OTC companies, and maybe let's see. You've been talking about Altair that I thought was pretty interesting. Can you maybe explain how large that company is? Yeah, maybe just for people. You have to be.
I can get like the transition of like the OTC, and maybe I can just make sure that the people understand the transition and where I'm coming from, what I may be focused on.
Okay,
that makes sense. Yeah. No, like when it comes to OTC, so what I was doing in the past before I focused on short selling, although I'm not short only or something like that. I still own indexes and I still own like some OTC stocks. And I prior to changing to short selling as my main interest, I used to scrutinize OTC companies, which are usually under 100 million in terms of market cap. So it's quite a change. And there, the OTC market is interesting just because not many people follow it, and there's a lot of hidden information that you can get, and then you can kind of identify interesting investment opportunities. So it's a lot less crowded, also a lot less liquid. So there's a lot of specific risks when it comes to OTC investing, but I've been.
That can be really crazy. Like I think this company, the shares are like a couple of $1,000, but if it's like sometimes one trades or two.
So. Yeah, Altair is a great example of that. I mean, that's really the one of the most obscure companies still on the market, and that's what I was kind of interested in. I used to run a newsletter, and actually I created kind of like a database of the companies, and I wrote about 400 OTC companies that are worth knowing about. So that's also out there for people who are interested.
Yeah, they can.
And
find
I will be writing an update.
Right, it's like jansvenda.com, and I'll also put
exactly
that in the show notes. And it's sort of follow up to the old Walker's Manual, which listed a lot of these companies. And it's amazing because you've done a lot of legwork or a lot of work on those companies, because the financials can be pretty hard to obtain. Not always, but for some of them it is.
Yeah. So what I was looking for in the OTC was really like obscure companies that are still interesting, and if you're not really forced too much on the liquidity, then you might find it interesting. But there are not only complete liquid stuff, but there are stuff that maybe just people don't really look at that often, and it's just been kind of forgotten. There was this, I don't know, like candied fruit company, which basically had like market monopoly of candied fruit in the US, that got bought out eventually. These kind of examples where you still had some liquidity and you could actually still have a lot of information, but people just didn't really look into it, and so on and so forth. But with Altair, that's really one of the most obscure ones. So it's a dark company, which means that they do not report to the SEC. And what happens is that you have to be a shareholder to get the financials. So it's a whole legal process to get them sometimes, and some managements, are really shareholder unfriendly, and they really want to make you, do all the proper legal steps before you can actually look at what you own.
Yeah, but by law, it's companies that have shareholders. They do have to report to the shareholders. but
Yeah.
they can throw a lot of roadblocks up to make that difficult.
Yeah. Basically, so of course the information would be there, but it would just, you would have to write a letter. The letter would have to be structured in some way. You would have to have the right things inside. I've been doing that for one client in the past as well. One part of the projects that we had together was basically, contacting these companies and making sure that they also comply with the US law. And a lot of times it was about the financials and trying to really find, what has been happening and can we get some information from the company. So Altair is kind of like that because it's a dark one. They don't really share the information in public. This is it's very dark one because
and
when I
just
first
for listeners, because I mean, I think some people are now thinking like, why would you do that? Why do companies go public and then not disclose and be so secretive? What's their motivation to act like that?
Yeah. Market is, that's because of the structure of the ODC. And do you hear me well? Is everything fine?
You're back now, but you disappeared for a minute. So just to make sure, maybe could
I will repeat it.
Thank you.
Yeah. So the idea behind the dark companies is because of the ODC structure. So of the structure of the ODC market, these companies usually are family businesses or kind of tightly held businesses which needed money at some point from shareholders, one way or another, and they allowed themselves to be public, but maybe 50 years later they're not super happy to be public, and they really don't want to deal with the shareholders. I mean, I had some phone calls where the management would just hang up on me if I ask around for the information. So they really are very sometimes quite shareholder unfriendly, but basically that's the idea. And they want to save costs, so they don't report to the SEC. That's another thing. So first is like, you were public once, you have some shareholders, but you don't really need it anymore, and it's more of a hassle than anything.
It
Secondly,
saves
you want
maybe
to save
like $1
some
million a year.
I mean, it depends, but usually at least 200,000 you would save by not having to report to the SEC. So that's another thing. And so that's kind of how it came about.
Yeah,
These
and
kind
that's
of dark
sometimes a
companies.
big part of the profits.
Yes, especially for companies, they make a million. For them it's a very material cost. So a lot of times it makes sense, to not report to the SEC, but it usually doesn't make sense to be completely dark. That's where it gets interesting.
Sense, but not so much sense for the minority shareholders.
Exactly right. So so coming back to Altair, this is their company that doesn't really communicate with any shareholders that much, at least on the public side of things. When I found it for the first time, I think I wasn't even able to find a website, and they don't have a website. I was able to find some sort of addresses, but I really didn't know, where the business is, what it is, and so on and so forth. And it's also trading around like $2,000 a share. So, also, I didn't really go and buy the share and then just try to find the information. So what I did for the first time was just to write a blog about it and say like, hey, this is probably the most obscure company that I found, because, I really can't find any information. Back then, maybe my due diligence skills were, slightly limited. I think after I learned how to kind of research a bit more and how to look at, property sales and property records and, structures of the companies and try to find some more information. So I think I would be able to do that coming from the standpoint of today. But back then I was kind of like really trying to find information and I wasn't able to. Yeah. And I wrote a blog post about it, and then one shareholder reached out to me and actually shared the financials with me, and kind of like that explained part of the mystery with Altair.
And what does it do, and why is it interesting?
Yeah, so what's interesting is that the valuation. Yeah, so I mean, in the ODC land, what I was partially looking at when it was obscure is, usually you have some sort of deep asset discount, when you compare it to the market cap. And that was really the case with Altair. Their balance sheet was really pristine. They have a lot of cash. I did not see Altair's financial, the most recent ones. So I'm coming with these informations from my original article on Seeking Alpha about it, which people can just check. And there, you could see the cash was, 17 million. They had no real debt. They had some factory which was heavily depreciated, or property, and so on and so forth. And basically, you could get to a net current asset value of like 17 million at that time, while the market cap was 15 million. Right, so you really are looking at like a huge cash box here. However, with a business that actually makes profit. So, usually you might have some ice cubes that, are basically like filled with cash, but they're burning the money somehow, companies that are maybe, loss making, and they just have a lot of money because they sold some of the subsidiary or whatever. Mm-hmm. So this is not really the case. So it's, it's been profitable throughout. The business is sterilization, or most of the business comes from like sterilization services, which I don't think will be impacted now, and also seem to have sort of like
or in a positive sense.
Yes, yeah. I mean, yeah, I think that certainly it has a certain moat, and it has it just makes a lot of sense. The business is not something completely crazy that people wouldn't be able to understand, and also it has to be licensed, and you have to have the proper things to actually do a lot of the things that they do. So it seems to have some sort of moat as well. And yeah, they've been cash flow positive, in the years that I saw the financials, and therefore I think this is a classic deep discount to assets, where it's there because it's illiquid, which I'm going to get to soon. And the second thing is just that the management is not really doing much to unlock the value. But with these kind of things, like, you buy it, forget it, and then one day you will wake up and it will be sold, special dividend, something, or not. Of course, it can take a lot of time, but with these kind of companies, it can be very interesting to look into, and try to get something. But it is not your classic investment strategy, where you would have some sort of movements and events and financials and so on and so forth. You kind of have to be knowledgeable about it, and especially in the case of Altair, because it is very illiquid. I mean, if you look at OTCmarkets.com, I don't think there was a trade this year. so that's a different story. So, it's kind of also quite hard to get hands on the shares. But I mean, you can set up an offer, you can set up a bid on them on the market and try to wait. And I think there is a way, or around it. If you are really digging in a lot, you might want to contact the shareholders that are holding it and whatever. So I think in the end, in the OTC market, in these kind of obscure companies, you can somehow get the shares, but it can be quite tricky and can be a very, very obscure and arcane way of doing things.
Yeah, but as liquid as this one is kind of an exception even.
Yes. I think it just shows like what is the example of the obscure company. And I found obscure companies that are trading and that are not as illiquid. So it's just a very, very interesting example, because it's really rare to find such a valuation nowadays, of course. So it's still there, and who knows what's going to happen with it. But I hear that the management team is like not the most open, but maybe a bit, bit less, violent against the shareholders as some other companies. So it's just an interesting example of a dark company when it comes to Altair. Yeah.
Cool. What are some of your favorites, or which OTC companies do you still like a lot?
Yeah, so I'm in the process of writing an update to my manual, and that should be out relatively soon. So I will have some new ideas there as well. But what I'm looking at right now, I'm just going to share one thing, is a life insurance company of Alabama which is a relatively liquid. I mean, it's trading, on a weekly basis, let's say, with some couple of hundred shares. So it is for relatively sizing in terms of the liquidity. And this is an insurance company. And what is interesting about it is that it has a activist inside, which in the ODC land can be very interesting a lot of times when you have management teams that are not super friendly, but you have someone there rooting for the minority shareholders, and that should be the case in life insurance of Company of Alabama.
How many of the shares did they manage to get?
I'm not super sure about the number right now, but they are pursuing lawsuits against the company. So basically, they are, serious about making sure that they hold the management accountable. Basically,
so it's maybe not so much a proxy contest or things like that of that nature, but
I think that a lot of times it can be just kind of. With OTC, I think like the corporate governance can sometimes be very bad. Yeah. And so therefore you can really sue them for that almost. And that's very rare to win a lawsuit for, failure of fiduciary duty, because if you're a public company, good luck trying to sue someone for fiduciary duty. I think it's, it's very hard to try to make case for that. But in the OTC land, I think sometimes it can be very obvious that something is wrong, and you can point out some obvious problems. So I think that what they have going for them is probably that the examples what I saw, they've been able to kind of pinpoint that the company is just being run into ground because they don't make money. I mean, it's a pretty okay insurer. They have relatively clean balance sheet, but they're just not making money because of their operating expenses. So that's where the management comes in, and they probably treat it as a piggy bank, or that's what activists are basically alleging. So this is very interesting because also.
So they have like fancy offices, maybe some company cars, that kind of stuff.
Yeah. In the OTC style, the activist pointed out a office chair for $5,000 for the CEO, whatever. So
maybe it's some back problems.
Yeah, true. We should be for sure comfortable with that. But yeah, like I think a lot of times it is not. Yeah, in the OTC world, it's not about Porsches or jets, but about chairs. So that's been just a funny example of what they found. But yeah, I think a lot of times just the salaries and so on and so forth that they're doing. And probably the most interesting thing about it is that the ticker is LINCA. They have two shares registered, two types of shares, two classes. Mm-hmm. But the more liquid one is LINSA, so LINCA, and this is trading at around $12 today. It's been up to 14 in the past few days, whatever, but roughly $14 to $12. And the management basically said to the activists, we're going to buy you out for $25 a share. So, if the management is willing to buy out the minority activists for 25, which is, a handsome premium at the current prices, that's probably something that should, pique interest of these investors.
That's, I think that was like an 80s practice, like it's green mail. It's when activists would come in. I think there's this movie is based on it, like the famous one about the Wolf of Wall Street. Maybe no, not that one. I'm sorry. I should know this one. People will definitely be screaming at their screens like it's that one.
I'm not super
Michael Douglas.
Sure.
And
oh, you mean Wall Street? I mean, you mean Wall Street?
Yeah.
Oh, of course. Oh, yeah, like. Yeah,
and I think Greenmill used to be like a practice that the activists would come, and maybe ICANN did a little bit of this, and he would be like, he had a really great asymmetric bet, because either the activist campaign worked and things went really well, or the company really wanted to, get him out, and they would offer him a little premium. to go away,
Yeah.
like a little bit above market. And that's also a good result. And I think it's not allowed anymore, but it really reminds me of that.
Okay, yeah. I mean, that I haven't actually like connected these two things together, but yeah, I mean, it's certainly interesting to
That's
see.
how it
So yeah,
sounds.
yeah, I mean, the management just said, go away, please, because
Yeah.
you're launching lawsuits onto us, and probably they're thinking like, wow, but maybe these lawsuits can actually be a problem for us. And so they're launching the activist. They want to sell the company, the activist. So the activist is trying to get force the management, or not force, but basically persuade the management to get rid of the company and liquidate it or sell it.
Mm-hmm. Yeah, and life
So
insurance is like kind of a commodity business, so it's you usually wouldn't need management to stay on.
I mean, not at this expense that they are running for sure. So I think that's the key. That's the key problem there. And they seem to be they have a website running the activists. It's been relatively public for the people that are in the know in the OTC. Even Oddball Stocks wrote about it, which is a famous blog in the OTC market. So 500 people know about it. But whatever the amount, it's a big one for the OTC markets. NATO Big used to run it or whatever. And so they wrote about it, and the activists have a website, and you can follow the lawsuit. And I think it's super interesting. I've started looking into it, and I think I'm gonna do some serious digging here. Also because I own a bit of it, but it was really like a very legacy position, and I looked into it like maybe 3 years ago or something like that, and there was a discount to book value basically, and I bought like few shares. So I'm actually a holder, so I think now I'm even more obliged to look into it. And I think that's when the management offers you to buy you out, I think that's really that's really where it gets interesting.
Yeah,
And the activists are of course saying, oh, we should get more once we sell the company and stuff like that.
Yeah, cool. So super interesting idea. Hey, maybe so I think we should really wrap it up, because it gets a bit long for the listeners, but it was fascinating to talk to you, and super interesting ideas. I hope to get you on another time, and we can talk about more stuff.
Sure.
But thank you very much for coming on. Where can people find you, or where do you want to connect with people? Maybe you have a
so for people that are interested in short selling, you can find some pieces on Seeking Alpha. You can certainly check out Breakout Point, which is a great platform. You can also follow me on Twitter, but I tweet relatively, not as quite rarely sometimes, but you can find something there as well. And if you are interested in the OTC part, really the website is the best that you mentioned, Svenda.com, where you can find the manual. You can find a lot of examples in the past that I've done, and
you're
also
coming
some
out
past
with an
podcasts.
updated manual in like a month or
In
something.
early August, in early August, and I do have some nice features ready for it as well. So I'm really excited to do that update. So people should check it out, check out my previous work, and be sure that
But if they follow you on Twitter or on your website, then they'll get
on the
notified.
website, or Seeking Alpha as well. That's where you will find something about it for sure.
Cool, that sounds great. Well, thank you so much, and we'll see you next time.
Yeah, sure. Thank you. Thanks a lot for the invitation again, and I hope listeners enjoyed our discussion. And all the best for you and your shorts and longs.
My pleasure.
Hope everything will work out.
Sure will. Bye-bye.